Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, January 16th, 2022. We've got another great show this week. I'll be joined by members of the media, academia, and financial services as we analyze all the news in lifestyle, wellness, finance, tech, so much more. So sit back, relax, enjoy this episode of BRN Sunday. Well, let's kick the show off as we always do with a look at what's happening on Capitol Hill. A lot happening these days. Joining me on the line, they're known as the Legal Eagles, but they're also known as David Levine, Kevin Walsh. Both are principals with Groom Law Group, an employee benefits law firm based in good old Washington, D.C. Gentlemen, thanks so much for joining us on the program this morning.
Yeah, Jeff, it's always good to be on. As we get into the grind of 2022. Holidays behind us now. Everybody's really focused on getting out of the gates and getting off to a good start. It's always good to be on the show, and we've had some exciting litigation developments this week. We're excited to talk about.
Yeah, David, take us, and Kevin, great. Thank you so much for that intro. David, why don't you take us through what's top of mind this week in terms of litigation?
Sure, Jeff. And it's the most wonderful time of the year because the courts are back in session, so we might as well pick up from the holiday season. I promise not to sing. But today we got two things to talk about. One, a decision in a very long-running fee case that kind of, for the geeks among us like Kevin and me, that kind of like ticks a whole bunch of the boxes of what's going on in litigation. The other topic is, well, we wouldn't have a week without hearing something from the Supreme Court, so Kevin will close out with that. Mm-hmm. So I'll start first with the Intel decision, the case that has something for everybody. Just as a quick recap, listeners may recall hearing us talk about the Supreme Court weighing in on Intel in recent years. Yes, it's basically that same case, but now it is a determination by a district court, so the lowest of the federal courts, but they're still pretty high, making a decision on Intel's fee case involving its use of its own funds, which include things like alternative investments inside, and the question of, can alternatives be used inside a plan? The definitive answer we get from the district court in the Northern District of California is yes. And also, it relates to who can bring a claim is a big item here as well. Also, what does it mean while we're waiting for that big Northwestern decision on the case we talked about in December to actually have to stay in a lawsuit? So let me tick off those points really fast, and then I'll hand it over to Kevin. First of all, where's the case? The case basically, except for one claim about providing documents, has been dismissed with prejudice. It means the plaintiffs can't refile again or again or again. They can try to appeal to the Court of Appeals, the Ninth Circuit Court of Appeals, but generally, except for the appeal, they can't relitigate this again. And what the decision says is, first of all, look, you have these Intel funds that use various alternative investments inside them. And plaintiffs, when you file a complaint, you haven't really told us what the appropriate benchmark is and given us one. And effectively, you haven't made a case. Why is this relevant? We know the plaintiffs' attorneys don't necessarily disagree with this, but it's yet another court saying, look, cookie cutter allegations with apples to oranges and pears comparisons of, well, this fund is identical to this fund, aren't flying in a number of courts. Is it uniform? No. Will we have to wait on Northwestern? Yes. But if you look at the line of authority that defense lawyers cite, it's going to be a big deal. Second of all, the judge did not throw out investments and say they were bad just because they used alternatives and they weren't just an index or just active, or just sort of publicly traded active funds. There's lots of views on this, but the key is it goes sort of in a more judicial determination that yes, the DOL information letter that we talked about recently that talked about the use of private equity in defined contribution plans approved it, but it gives a more broad sort of, it's not per se bad, despite what some would like to think. The last thing is a little bit of a technical thing. It's about who actually has grounds to sue and based on what. It picks up on the Supreme Court case involving U.S. Bank versus Thole versus U.S. Bank that basically says you can't just say, hey, this document was bad. Oh, by the way, I never even necessarily read it. Now, that's a really simplified explanation, but I'll leave it at that because I've gone on and on. Kevin, anything you'd like to add, disagree with, or do you want to talk about the actual Supreme Court ruling on something?
Well, I'll do both. I mean, I think, David, I think you hit the key points here. I mean, for me, I'm looking at this as part of, is there a trend or is this against a trend? And to me, this decision seems like part of a recent trend that says to, plaintiffs when they're alleging, imprudent investment decisions by plan fiduciaries, or where they're alleging that, you shouldn't have put something in a defined contribution lineup, where courts are saying, you've got to plead that with more specificity. Now, whether that trend continues or not, as you highlighted, David, we've got that case at the Supreme Court later this year, which will either, be the crest of that wave or it'll break the wave. So I think that it really tees up the Northwestern decision later this year to see if this really is part of a trend to require plaintiffs to actually, have facts to back up their allegation that things were expensive, or that whatever type of asset was included in the plan is a bad asset in the eyes of the plaintiff. So with that, I think I'm going to pivot real quick. It's not retirement related, but it is Department of Labor related, and it is benefit related, and it's been top of people's minds. So I think the big thing, just the story of the week, has been on the legal front that the Supreme Court decided two cases related to the Biden administration's vaccine mandates related to COVID-19. That the real short form is that in the first case, NFIB versus OSHA, the National Federation of Independent Businesses asked the court to, not allow the agency to enforce that rule while litigation was ongoing. And yesterday, the Supreme Court said to OSHA, you can't enforce that rule while litigation is ongoing. It's a wonky little thing, but they said, major question doctrine. So the idea here is that the statute that OSHA has been around for 50 years. They haven't used it for, vaccine mandates in the past. And a majority of the court seemed to conclude that, at least on first review, and they've sent it back to the district court to figure out what to do and whether what the decision should be on the merits. But at least on first view, the Supreme Court thought that there's a substantial likelihood that the NFIB will be successful in arguing that, OSHA's vague statute or the powers that OSHA's statute grants it aren't clear enough to say that, they can use regulatory ambiguity to issue a nationwide vaccine mandate for large employers. The second case was, Biden versus Missouri. And there, the court stayed two injunctions that would have prevented the Secretary of Health and Human Services from requiring facilities that participate in Medicare and Medicaid to ensure that their employees are vaccinated against COVID-19. So in some ways, it was a bit of a split decision. For organizations that are receiving Medicare and Medicaid money, medical facilities, the Supreme Court said, it looks like there's a substantial likelihood that the vaccine requirement there is compliant with law. But at least for the time being, in the other case, the NFIB case, they said, that mandate on private employers with 100 or more employees, it looks like that probably isn't within OSHA's powers. And said, OSHA, you can't enforce that at the moment. So big deal, and we'll have to watch those going forward as folks are, interested in, major question doctrine, I think is really exciting. But also, watching how the pandemic plays out, and in particular its impact on retirement plans.
Yeah, really, David, I'll let you jump in a second, but I got to commend you, Kevin and David, because you guys break it down in a way that even I can understand, and that means a lot. Because a lot of times when you watch television or listen to radio, there's a lot of gobbledygook, but you guys really just broke it down in a meaningful way. Can I just ask one question going back to the Intel decision, and then we can let you guys off the hook for the rest of the weekend. How does this reconcile, or do you have to reconcile it as a legal person with the recent supplemental statement that came out from the Department of Labor, or are they mutually exclusive?
The answer is it's an overall landscape, Jeff. Mm-hmm. It is remember, the Department of Labor information letter on private equity talked about a fact pattern. That's what information letters do. Mm-hmm. Then the DOL came out with something that they say is clarification. They didn't withdraw the letter. They just said, here's the situation this letter exactly applies to.
Mm-hmm.
We're not saying anything outside of that context. And in fact, this has been a tension item because in ERISA, there's only one ERISA. There's not sort of ERISA for big plans or small plans. So there's one ERISA. So it's just saying we opined on this fact situation. What makes the Intel case so interesting, and yes, there will be people who grab one or the other, but in the Intel case, it's a plan like what the information letter relates to, A, but B, the Intel case talks about broader concepts and just talks about it, not just private equity. It talks just generally about investments generally, and it can be looked to potentially by a broader audience. There will be different views, but I think that's our view as we look at it this morning.
Yeah, well, again, thank you for that, gentlemen. Really, really interesting stuff. I think we're going to be talking about both of these items in the weeks to come. Enjoy the rest of your weekend. Stay safe, healthy, and we'll talk to you again next week, boys.
Thank you, Jeff.
Bye, guys. Welcome back. Now we're going to talk a little healthcare. Joining us on the line, she is the healthcare editor for Business Insider. She's also the editor of Dispensed, a curation of all the latest healthcare news, which, of course, you can find on the Business Insider website. We're talking about Lydia Ramsey-Flanzer. Lydia, it's great to talk to you. Happy New Year. Thanks so much for joining us on the program this morning.
Happy New Year. It's definitely an interesting time to talk about healthcare.
It is, yeah. I mean, I feel like 2020, 2021, and now it looks like 2022 really sub-theme is it's all about healthcare. It's about this pandemic. Lydia, I wanted to maybe we start with your reaction to we're recording this on a Friday afternoon on the East Coast and morning on the on Mountain Time, but get your reaction and readers' reaction to the Supreme Court's kind of split ruling, I guess, from yesterday.
Yeah, it's regardless something I haven't read up too much about, but definitely really interesting that, the Supreme Court has kind of upheld or decided that the vaccine mandates that the COVID-19 vaccine should be mandated in workplaces. They turned that down, much to the disappointment of, I think, the Biden administration, who had kind of been championing it. It seems like it's going to be interesting to see how employers navigate this if they decide that they want to, still create their own mandates, take different approaches. I'll be curious to see. It's really interesting in the backdrop of the Omicron surge, which has been hitting everyone pretty close to home, it sounds like. I'll be curious to see what these next couple of weeks hold as we try to return to work and stuff.
Yeah, I wanted to ask you about the Omicron surge, and when you kind of follow the news, you're reading Dispense and other periodicals. I mean, it really has just affected so many people, and it seems to be the velocity by which it travels seems to be unlike any other variant that we've experienced, and it really has impacted cross segments of our population, in addition to around the globe.
Yeah, it's I've been seeing a lot of people make these jokes that we've flattened the curve. It just got flattened in the wrong direction. It's pretty striking to see some of the kind of uptick in cases. Positivity rates are really high, but it's interesting to see kind of the U.S. isn't the first place we've seen this spike. South Africa has been tracking it since around Thanksgiving, and they're seeing kind of a dip coming quickly after that huge spike. So I'm hopeful that we get to see the same. I think we may already start to be seeing it in New York and some other places that got hit a little earlier than others. But for me, I'm being extra vigilant. It's kind of a bummer. It feels not quite like March 2020, but definitely less fun than maybe over the summer.
Yeah, I think we're all looking forward to that very sunny, beautiful weather. We're certainly not going to have that this weekend here in Charlotte, North Carolina. We're supposed to get snow. What about you and I have spent lots of time talking about vaccines. Any movement on, for example, improving vaccine strength around the Omicron variant? Is that something that our friends at Pfizer, Moderna, Johnson & Johnson, and others are working on?
Yeah, Pfizer and Moderna both have variant-specific programs that they're working on. These are booster shots, so they come after like initial doses, and you'd get a variant-specific shot. Those are going into trials in March. It's really tricky because, even though we have these really neat mRNA vaccines that are really easily programmable and can be ramped up really quickly, the process for testing them out and making sure they're safe and effective compared to existing vaccines still takes a bit of time. We had to see this booster data as well, but it's really tricky. So when we talk about, I think Pfizer laid out a March timeline to our reporter Andrew Dunn this week of getting these into human trials. So it's not a done deal yet. They've done this before for Delta. They talked about it for the Alpha variant. But luckily, it does seem like boosters are providing some support. I know a lot of the folks I talked to who have had their boosters and then get COVID, the conditions are, the symptoms are pretty mild. They're much more like a cold than, say, like a flu that knocks you out, muscle ache, sore throat, things like that. And so that's heartening to hear, like the idea behind vaccines that we sometimes forget about because at first the data looked so good is that the whole goal was to keep everyone from being in the hospital or dying. And so it seems like at least for now, that's holding true.
Lydia, one of the challenges has been getting, I guess, with so many volumes of people getting sick, getting testing. And I know the administration's working hard to get tests produced and in the hands of, for example, school children, because this has been a big issue with teachers in Chicago and around the country, whether or not there should be in-person or remote learning. We're not going to jump into those politics. But has there been any improvement in terms of getting more tests out into the public domain, whether you're going to get them through Amazon, you're going to go to your local Walgreens or whatever brand you choose to shop at?
Yeah, from what I've been hearing, it's still quite hard to get your hands on tests. I'll be curious to see if that starts to change. The Biden administration has said that we should be able to have insurance cover up to 8 tests per month. PCR tests tend to be covered anyway, so these would be more at-home tests that you wouldn't get at like a retail pharmacy. But yeah, I'll be curious to see how that impacts the supply, because I know for most people it's really hard to get their hands on tests at the moment. And it'll just be a matter of, whether or not the Biden administration can pull it off. I know that it sounds like they're having a few speed bumps to get this done by their January 15th deadline.
Yeah, well, certainly with a spike in people getting the disease, probably makes sense to get the testing ramped up, and hopefully that will happen. I guess last question here, Lydia, around masks, and has there been a move forward? I think I read that the CDC has said, the KN95, the N95, those are probably the better masks to get because they are able to obscure the projection of the virus rather than, wearing a cloth mask or something that, there's lots of high profile masks you can buy now from even some of the top designer brands, but it seems like these N95 or KN95s are the ones that people should be looking to get.
Yeah, it's all about where you're running into risk as well. So, for instance, like I'll often wear a surgical mask, maybe even coupled with a cloth mask to make it a tighter fit. But some of the KN95 masks you can buy are quite uncomfortable to wear after long hours. They get kind of sweaty. They rub up your nose. So there's definitely options out there, but it is a great idea to think about where you are and kind of what protection you might need. If you're in a big crowd, probably having more secure coverage is a great option. If you're going grocery shopping and you're not near too many people, you could be fine with like a less strict mask. I've seen some really interesting charts lately about the spread of Omicron and just like the different levels of face protection. And it definitely seems like, obviously, N95 is the way to go, especially if it's a good fit. But if it's not available to you, definitely upgrading to a surgical mask can be a huge help as well.
Yeah, I just read a funny article. I just have to run this by you. It says it had a whole question of looking into the different types of masks. And the last question was almost like an FAQ. It says, "My cloth masks are cute. Do I have to throw them away?" Now, I'm sure people have very nice masks, and so what they recommended in this article is what you, I think, were referencing, which is doubling up. If you can't find that KN95, but you want to keep your cool mask, if you spend a lot of money if you went to Gucci, for example, and bought a Gucci mask, you can use that in tandem with, for example, a surgical mask.
Mm-hmm. And a lot of those cute masks will also have filters that you can sub in, so that's also a great option as well.
Absolutely. Well, Lydia, we're going to leave it there. Great chatting with you as always. Happy New Year. Stay safe, and we look forward to having you back on the program again very soon.
Thanks so much. All right.
Bye-bye.
Bye.
Welcome back. Now we're going to take a look at the markets. Joining us on the line, he is the lead anchor for the TD Ameritrade Network. In fact, you can find him bookending their programming every day. Markets, Morning Trade Live, and Markets on the Close. I'm talking about the Oliver Ranick. Oliver, great to talk to you. Happy New Year. Thanks so much for joining us this morning.
Same to you.
I hope you had a good holiday. We haven't talked to you in a little bit. I know, our schedules kind of did not align, and you took a little breather. I hope it was a great holiday for you.
That's right. Yeah, it was a little rested and needed it because we're already off to some action and some volatility to kick off 2022.
Gee, is it, what's the Who song? Same boss, new boss, same as the old boss. And it sounds like, volatility is the king here. So what's going on this week, Oliver?
Biggest thing is that markets are trying to bounce off some important technical support areas and not really having much success. Our focus has been on the NASDAQ because of the importance of big tech, but also the susceptibility of growth stocks to rising interest rates and a tightening regime from the central bank that is clearly the biggest story so far this year. So as that has investors repricing assets and selling expensive growth-oriented businesses that benefited from 2 years of nonstop liquidity. Basically, we're seeing some of that trade continue to unwind. Some of this has been going on for almost a year now, and some of it is more recent. But the number of sectors that are now in downtrends or bear markets is getting longer, and that is weighing on the indexes. But so far this week, they're trying to hold some important technical junctures, namely in the NASDAQ, small caps as well. So we have to be very wary if those levels start to break.
Oliver, let's talk a little bit about big bank earnings and get your sentiment about that. And, obviously big banks in general, they are, I would think, rate sensitive or sensitive to rate hikes, right? Because they're going to have to pay higher interest. The borrowing rate is higher. The Fed fund rate is higher. But how about these earnings? Did they shed any light for you and the folks over at the TDA network?
So far, nothing particularly positive. The banks, indeed, as a group, have been an important sector to potentially offset the weakness that we're seeing in growth-oriented areas of the market. But earnings right now, just to start things off on Friday, I mean, we've got more next week, but it's a little bit dicey. JP Morgan dropped 6% at the open this morning, and that's not something you typically see. Oftentimes the banks do get sluggish around earnings because they don't offer huge growth. There's nothing very enormously impressive on the top line. So sometimes we do get weakness. That's kind of the basic assumption for banks around earnings, but we don't get 6% sell-offs. So it's a really interesting event because it brings up the idea that possibly this group of companies, these banks that benefit from higher rates, that could be an investor safety trade or a sector kind of solace during a rising rate environment, if they're dropping 6% on earnings, it really should make us question whether or not that is reasonable expectation by investors that these banks can lead. These stocks were breaking out to highs just over the last month. So you wonder how much of this environment that could benefit banks has been priced in. And when you see that type of sell-off in JP Morgan, there's nothing really wrong with the earnings, just the expectations were too high. They didn't quite reach revenue expectations. The best performing bank so far is actually Wells Fargo, because they're able to do double-digit top-line growth as they try and reclaim some of their lost market share. So it's a bit of a company-specific story, but we'll see next week after the rest of them report, Goldman, Bank of America, et cetera.
Yeah, Oliver, I want to ask you about retail sales. I think I was surprised to learn that month over month, December wasn't great for retail, and it was holiday. It was the holidays. I don't know if you missed that, or maybe people miss that, but that's usually the time where people buy things.
That's
so
right.
that was kind of
it wasn't
disappointing.
very impressive. Yeah, the data overall has actually been a little bit underwhelming. Our economic data the last 2 weeks, the employment situation missed the top line. ISM services missed the top line last week. Then we get the retail sales missing here this week. Consumer sentiment also a bit lower than expectations. So the data is showing kind of early signs of potential fraying a little bit. Our core trend for employment is good, and it's enough for the Fed to feel justified in its tightening campaign. But it does iterate how much of that really is a solution to inflation. At least the Fed's solution is to try and tighten things up, because there are still plenty of risks to the economy. Not so much from an employment and jobs perspective, more from a consumer earnings perspective, when we consider how much of the consumer was buoyed by stimulus and economic support last year. These retail sales suggesting that maybe some of that lift that we got during the COVID pandemic for personal income is indeed unwinding. We've also seen that in the personal income numbers. We've seen that the savings rate that soared over the last year and a half has come back down, and that personal incomes are almost even with where they were during COVID. So this economy very much depends on people taking jobs. The good news is there's 11 million jobs open. So if you weren't able to buy a bunch of stuff for Christmas because you blew your money trading over the last year, there's a job out there. There's a job out there waiting. There's 11 million of them.
Well, actually, you could have two if you wanted. I mean, why stop at
Yeah.
why stop at one? Last question, and you can just make this a minute or less. I wanted to get your thoughts about cryptocurrency. You know, we had Kevin Kelly, our friend from Delphi Digital, on talking about the Bitcoin outflows, and I always love to get your perspective. I get his perspective on crypto, but I want to get your perspective on what those outflows may signify, and just in general about cryptocurrency.
Sure. Yeah, Kevin had a great report this past couple weeks looking at Bitcoin's connection to the macro environment, and I agree with pretty much all of it. We're seeing really the connection Bitcoin has to a changing interest rate regime, and really importantly, the narrative for Bitcoin that has allowed it to spread and resonate with so many people is a narrative about how the government spends too much money, doesn't pay attention to inflation, and will deflate the currency, and that's just not happening. So now what we're getting is quite the opposite. So Bitcoin naturally is going to be coming under a lot of pressure because, one, obviously without any real fundamental use case, apart from speculation, crypto assets are going to be extremely vulnerable when liquidity is exiting the system, as investors will take their money out of the stuff that doesn't pay them dividends, that doesn't have regular earnings. Crypto obviously has none of that, apart from yield in crypto, which is basically still a different form of speculation. But essentially, Bitcoin is in big trouble right now because the liquidity is coming out of the system. That's not good for a speculative asset. And it is just so specific to the Bitcoin narrative. When Bitcoin bulls told us for the last 3 years the Fed was never going to be able to combat inflation, and now they're doing so at a more extreme pace than anybody expected. So that is for Bitcoin.
There he is, folks. Oliver Rennick breaking it down for us this first time this year. Oliver, thank you so much. Enjoy the rest of your weekend, and we'll talk to you again very soon.
You got it. Have a good one.
Bye. And that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in lifestyle, wellness, tech, finance, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or see our latest content? Then check out our streaming partners, Amazon, Roku, Samsung, and over 100 more platforms. We're back again tomorrow for BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.